Physical property. Generally categorized as either real or personal. Real property. Physical property that is not mobile. If moved would alter the functioning of the property. Personal property. Physical property that is mobile. Standard fire policy. Generally accepted manner of underwriting for property loss due to fire. Most recently, it has been largely removed from circulation, replaced by homeowners' policies for residential property owners, and the commercial package policy. Replacement cost new. The value of the lost or destroyed property if it were bought new or rebuilt on the day of the loss. Straight deductible. Requires payment for all losses less than a specified dollar amount. For example, if you have a $200 deductible on the collision coverage part of your auto policy, you pay the total amount of any loss that does not exceed $200. In addition, you pay $200 of every loss in excess of that amount. If you have a loss of $800, therefore, you pay $200 and the insurer pays $600. Franchise deductible. Similar to straight deductible, except that once the amount of loss equals the deductible, the entire loss is paid in full. It is used in crop hail insurance, which provides that losses less than, for example, 5% of the crop are not paid, but when a loss exceeds that percentage, the entire loss is paid. Disappearing deductible. Deductible whose amount decreases as the amount of loss increases. For example, let's say the deductible is $500 to begin with. As the loss increases, the deductible amount decreases. Coinsurance clause has two main provisions. First, it requires you to carry an amount of insurance equal to a specified percentage of the value of the property if you wish to be paid the amount of loss you incur in full. And second, it stipulates a proportional payment of loss for failure to carry sufficient insurance. E-commerce property risk. Business risk exposures because of the use of computers, the Internet, and the web. Examples of e-commerce property risks. 1. Hardware and software thefts. 2. Technological changes. 3. Regulatory and legal changes. 4. Trademark infringements. 5. Internet-based telephonic crimes. Hackers. Virtual vandals who try to poke holes in a company's security network, often satisfied with simply defacing websites. Crackers. Virtual vandals who want to break into a company's security network and steal proprietary information for personal gain. This is what potential terrorists are classified as. Their objective is to hit specific companies in order to bring systems down, steal data, or modify data to destroy its integrity. Insiders. Internal employees upset with the company for some reason, perhaps because of a layoff or a failure to get an expected promotion. Access to the company network, and the knowledge of how to use it, gives this group the potential to cause the most damage to a business. Virus. A program or code that replicates itself inside a personal computer or a workstation with the intent to destroy an operating system or control program. When it replicates, it infects another program or document. Domain name hijacking occurs when an individual or a business reserves a domain name that uses the trademark of a competitor. Cybersquatting. Seeking compensation for the use of a registered domain name from the rightful trademark holder essentially occurs when a business or an individual reserves a well-recognized name or trademark of an unrelated company as a domain name with the intent of selling the domain name to the trademark holder. Website hijacking occurs when a website operator knowingly deceives the user by redirecting the user to a site the user did not intend to view. Encryption allows the sender of an email to scramble the contents of the document before the recipient can read the message. He or she needs to use a password or a private key. It is used for confidential communications. Firewall protects a network from intrusion by preventing access unless certain criteria are met. Virtual private network allows remote users to gain secure access to a corporate network. It provides endless opportunities for telecommuters, business travelers, and multiple independent offices of a bigger company. Global risk. Unique problems that arise when companies cross national borders. Main categories of this type of risk exposure are 1. Destabilized international political environment, 2. Heightened terrorism Risk, legal risk due to changes in local laws. 3. Lack of data risk, currency and convertibility risk, cultural barriers risk. Political risk, unanticipated political events that disrupt the earning or profit-making ability of an enterprise. Non-admitted coverage involves contracts issued by a company not authorized to write insurance in the country where a risk exposure is located. They are written in English. Use US dollars for premiums and claims. Utilize terms and conditions familiar to U.S. risk managers, and provide flexibility in underwriting. However, they may be illegal in some countries and the local subsidiary may be subject to penalties. If the contract's existence becomes known, premium payment may not be tax deductible. Admitted insurance involves contracts written by companies authorized to write insurance in the country where a risk exposure is located. Great natural disasters, catastrophes of such magnitude that the affected region's capabilities to respond effectively are clearly overstretched and supra-regional or international assistance is required. Earthquakes caused by friction between moving tectonic plates originating at fairly well-defined faults. The Pacific Rim is especially prone to this type of natural disaster. Tsunami, large, rapidly moving ocean waves provided by the displacement of water caused by earthquakes, landslides, volcanic eruptions, or even a sufficiently large meteorite impact. Most are caused by underwater earthquakes. Storms consists of a variety of potentially catastrophic events that collectively have represented the most significant of all the natural hazards, generically known as tropical storms, but have various names by region including typhoon, severe tropical cyclone, severe cyclonic storm, or tropical cyclone. Floods, partial or complete inundation of a normally dry land area caused by an overflow of tidal, river, or lake water or after a heavy rain. Damage from this natural disaster can result from a single event, such as a hurricane or thunderstorm. It can also occur due to repeated exposure to rainfall. Volcanism, vents in the Earth's crust through which gases, molten rock, lava and solid fragments are discharged. Terrorism, an act of violence or threat of violence against individuals or property committed by one or more individuals acting on behalf of an organization for the purpose of influencing government policy or action to advance a political, religious, or ideological cause. Bioterrorism. The threat of biological weapons used by terrorists. Critical infrastructures. Systems whose incapacity or destruction would have a debilitating impact on the defense or economic security of a nation. Interdependent effects. When a disruption spreads beyond itself to cause appreciable impact on other systems, which in turn cause more effects on still other systems. Greenhouse gas emissions. Gases that contribute to the greenhouse effect by absorbing infrared radiation. Major emissions include carbon dioxide, methane, nitrous oxide, hydrofluorocarbons, perfluorocarbons, and sulfur hexafluoride. Carbon credits. Each unit gives an owner the right to emit 1 metric ton of carbon dioxide into the atmosphere. Genetic engineering. A branch of biotechnology, which is a discipline that encompasses all innovative methods, techniques, processes and products using living organisms or their cellular constituents. Precautionary principle. Where there are threats of serious or irreversible damage, lack of full scientific certainty about whether damage could ensue should not be used as a reason for postponing cost-effective measures to prevent environmental damage. Risk analysis. The analysis for events that hold a catastrophic potential. Catastrophe modeling. The use of computer-assisted mathematical techniques to estimate possible losses associated with catastrophic events. It is primarily for natural catastrophes such as hurricanes, earthquakes, storm, and floods, and is used by insurers, reinsurers and intermediaries. Scenario planning. A strategic planning method in which analysts generate simulation games that are used by management to consider and develop plans to deal with alternative futures. Crisis management. The process of identifying those situations that constitute a crisis, having an organized response to the crisis and ultimately resolving the crisis.